Okay, welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, April 13th. We just got the release of retail sales in the United States, weaker than expected pretty much across the board. So you're looking for a month-on-month print of 0.1, came in at negative 0.3. Auto also coming in weaker than expected. If you take ex-auto and gas, core retail sales coming in also weaker than expected across the board. One caveat is that you did get some revision. So if you look here, the negative revision that we had last month got revised to 0. Same thing on ex-auto, core upward revised to 0.6. So it's sort of a mixed print here, guys. You did get weaker than expected reads across the board for March. Decent revisions for the previous month, so I don't think you'll get too much play off this release. Looking at the dollar index today, it is stronger, or the dollar in and of itself is strong against all its major counterparts, pretty unchanged against the Kiwi here. Biggest loser on the session, Swissy down 0.73%, Euro down 0.61%, Japanese yen down 0.58%. Nice rebound there in the yen. So we'll see if this data print has any implications. Keep in mind the major data release for the United States still stands later this week. Tomorrow we do get the release of US CPI, which is going to be a much more critical read for the U.S. economy, as that's the laggard of what the Fed is looking for. So that's on tap tomorrow. We're looking for a print of 0.2. Core CPI is expected to come in, ex-food, ex-energy, at 2.3%. A hold at 2.3%. It's going to be the headline figure we'll be looking for tomorrow. Also on tap today at 2 o'clock, right after Jamie's webinar, we do have the release of the Fed's Beige Book. The Beige Book obviously is an updated assessment from the Fed's 12 districts. Doesn't necessarily charge any shift in policy by any means, guys, but it does sometimes offer some volatility. So the broader implications are kind of a moot point, but certainly we do want to be aware of that release at 2 p.m. today. Minho, great to see you in the room. Eileen, Permendra, Patrick, Pete, Sophia, Tabor, Jimmy, great to see all you guys here in the room. So as always, feel free to throw out any questions or trade setups that you want to review at any time. First things first, let's jump through some of the setups that we highlighted yesterday. So the British pound is first up on tap. A little frustrated there. I got stopped out of the rest of that trade at break even. So we did book a nice 50 pips there on that last crest, just below that 618 retracement. And like I said, the near term immediate bullish invalidation level that we noted last night, 42.31, we broke right below that. So we came back, tested that 41.75, moved higher, testing this as resistance, and then we're moving off again. So for the pound, here's what the chart looks like on the daily. It's the 30-minute. Here's the daily. So again, we're kind of in no man's land here. The open for the month comes in at 143.57. That's what I was actually targeting on that last target for the long scalps from last night. We didn't quite get up there. Again, keep your eye on this basic resistance trigger here on the daily chart. Really a break above that and a move surpassing 43.57 in my mind would validate a much more clear technical break to the upside. One other thing that you want to keep in mind, we've been following this slope. I know Jamie's working with a slightly different slope. Again, his is a little bit longer term of a picture, so he went back a little bit further with this. The one slope that we both are looking at is this, though. So if you connect the lows that you made for December, the highs from February, it was a perfect tag also of the March high. That's 3 tags of resistance and really gives us a validation of using that trend line. Comes in just higher. Okay, so right around 43.80, 43.90, something like that would be the major key resistance we want to see alongside a topside break here in the momentum signature. Eileen says, when trading sterling, do you sometimes widen your stops to not get stopped out for the quote-unquote throwovers? Sometimes I do, Eileen. I can tell you definitely that. Last night I didn't. I played it pretty close to the chest. So here's what the sterling looked like. And like I said in last night's piece, I don't have it on the 5-minute chart because it was closed out yesterday's session. But on this rally here, this was a perfect entry, guys. Remember we talked about this during the webinar. We added this sliding parallel and said, you know what? If we do pull back, just keep that in mind. Sliding parallel for the current operative slope might be a decent place to catch the low. It was a really nice tag. Okay, right into 42. Momentum held 40 like a floor here. So we jumped in about 42.15, 42.20. A couple of entries on that one. 3/4 of the trade got taken out on the way up. Obviously, we booked 36 pips on the first rally, brought our stops to break even, took another 2/4 off here on these peaks. and our stop was at break even. So we did get literally at break even, stopped right there, came back up. You could see a rally back towards that former median line support as resistance. But at the end of the day, the broader picture still remains constructive. From a scalp bias, I just don't want to necessarily jump into fresh scalps from here. I think we can get a little bit more of a decent pullback towards 41.75. That being said, for me, 41.75 is still going to be the broader bullish invalidation level. So if we do get a nice moderate lower here in U.S. trade, again, I'd be interested in possible long exposure on a move down into that region. Key resistance still 43.50 into 43.57. That's now also the weekly range highs. So quick look at the British pound here from where we were yesterday and where we are today. Again, I'm hesitant to do anything on the long side while we're outside of this ascending median line formation. Now that we've broken below it, could see some more sideways action, could see another drawdown before we move to higher highs. Any questions on the British pound? Mitten, great to see you in the room, sir. Hope all is well. All right, so that is the British pound. Again, one of the scalps I've been most active in actually is the British pound. We were playing around yesterday with Euro Aussie, still stalking some entries on Aussie Swiss and Sterling Yen. We'll go over those in a moment. But next up is Euro Aus. So let's jump into that setup. Here's what we look like yesterday on Euro Aus. And again, just some interesting stuff to take into account. Keep in mind tomorrow, guys, we do have the Bank of England interest rate decision. No changes noted or is expected. So we'll have to see what the commentary looks like. But certainly we want to keep that on tap tomorrow morning. Mitten says, all good outside of trading life. Oh, Mitten, what's going on with the trading, man? Let me know if I can help you out with anything. You have any specific trades you're looking at? Would you have taken the long at 8 a.m. Eastern on sterling dollar? Let's take a look. So there's that break-even trade from yesterday. Again, the exits were right ahead of that because, again, we're only looking for 38 pips per scalp was a quarter of the daily ATR yesterday, or 36 pips. So we want to always keep that in mind. But at 8 a.m., you're saying? Oh, just right now. Okay. I'll tell you why personally I wouldn't have been interested in that trade. Eileen, obviously the trade would have been phenomenal, right? You would have definitely taken out the 36 pip rally right off the bat. This is the data print, remember, just right now that we got for retail sales in the United States. So, Eileen, if you're playing the data, yeah, that would have been the right trade. My only problem is that you're not coming up and trading off of support. Remember, when we're near-term trading on the intraday, you always want to be playing against a target. Okay, momentum, all these oscillators that we use and all these technical indicators we use are just there for a tell. I never really want to just completely put my reliance on an indicator to take the position. It's always going to be based on where price is. And while you weren't at any concrete support, the only caveat here, Eileen, that would have maybe prompted a move is the fact that your stop would have been against that low. And that was a pretty tight stop. So on that basis, yeah, it would have been something I'm interested in. But generally speaking, you want to be making sure that when you're trying to fade a move, and specifically a move on the back of the session bias, which is obviously to the downside, you want to ideally be taking it against a support or resistance structure. That said, because the stop was so tight and you're trading off the rally for the data, yeah, I would have actually been interested in taking something like that. The only thing is, again, super nimble, right? So we would have gotten out as soon as we achieved 36 pips, stops at break even, and look to see if you get the final stretch. Does that make sense, Eileen? Great question, but we just got to make sure, if we're not coming off support, you do have a super tight stop like that on a data release, sure, but those are the trades that you have to be really quick-fingered, okay? Mitten says, it's the reversal on the indices was aggressive on the way down, and the turn hit hard. No worries, another day, another dollar. Love the attitude, Mitten. We'll take a look at the S&P and the Dow today for sure. They both came off some pretty big support, so I hear you on the rebound there, right? Mitten says, will you cover Aussie dollar as well? Well, now that you asked, I will. Let me just jot it down. We'll definitely take a look at Aussie for sure. Okay, so any other questions on sterling before we move off, rather? Good eye, Eileen. Yeah, just make sure again. Risk reward is everything. So against the session low for Europe would have been a decent scalp on that, but really, really quick. You're not looking to play it through the session range highs unless we get, an opening range break here in the U.S. Okay, right up on tap next is Euro Oz. Here's what the daily looks like. I highlighted this setup on Daily FX yesterday as well. Look, the major level here that we broke was on the daily chart, and it was 49.04. 49.12, I believe, was the actual open, guys. This was a misprint on the chart. You can see it on the scalp chart better. 49.12. That's actually the yearly open. Okay, very nice and easily identifiable pivot in price. It also represented a 38.2 off the low, was 49.20, and that break yesterday was pretty big. Not only did we break it, we tested the lower median line, came back, tested that region as resistance, then broke through. That's your ideal type of conviction break. Okay, so the major support target that you're looking for initially is 47.54, which is a 786 retracement. That's right over here. The 618 of the near-term rally was at 47.47, with a subsequent target down at 46.98. That's basically the 47 handle. We're meandering in that region right now. The low of the session so far was 47.35. Here's what the scalp looks like. By the way, before I get into the scalp chart, just some really interesting technical features you want to take into account here on Euro Oz. If you take a long look back, and obviously we've been following this pair for a few years now, but if you look at this formation that we set back in the 2013 and 2014 swing highs, the lower median line parallel caught the low that we made for the year here in August, almost to the pip, just off the lows here in early 2015. On the way up, we sailed through the upper median line parallel. Then we came back. Once we broke below the upper median line parallel, it was resistance. It broke through. It was support. We came down, support, break through, resistance. That same median line that extends back almost 3 years, right on the money. Okay, that level was also a 38.2 of the decline off the highs, and it was also the upper median line parallel. This is a very clean parallel, guys. You see this lower median line parallel caught the lows to the tick. There's the pivot on the median line, and there's the upper median line parallel. So an extremely clean descending formation here in Euro Oz. And once we broke back below that basic trendline support, the yearly open, again, that's 149.12, that was your validation for a move lower. You're now rebounding off of critical support. Okay, critical. Here's what it looks like on the 30-minute. And here's what it looked like last night. Okay, so we had broken down. We were looking for an immediate downside bias while below 48.74. First target's at 48.33, got taken out before we even wrote this. Second target was right down here at 47.46. We came right into it, rallied back up towards that 48.33 level, and then again testing the same key support right there at the 618 retracement of 47.46. So going to maintain a downside bias while within the confines of this formation right here off the highs. You could get a little bit more of a stern rebound at this point. Our near term, well, let me do this first. Before we move forward, guys, a basic retracement off the highs. Just want to see where those levels come out. Oh, that's why. There we go. And when you do that properly, look where the 236 comes in. It was the exact high that we made an overnight trade. So at this point, we're going to go ahead and open this up. We're going to get rid of that 50% retracement. The 38.2, we're going to go ahead and open that up too, get rid of that. We're going to stress that 49.13 level, again, the yearly open. It also comes on exactly with the 38.2, so we'll get rid of that as well. And the 236 lines up perfectly with the 618, so we'll stick with that. Now you have fresh downside targets here, or fresh upside targets, I should say, on the rebound type play. Again, looking to stay broadly on the bearish side of the trade while below the 49 handle. Basically right here, this confluence of the yearly open and that 38.2 retracement. So the immediate focus is you're probably going to see this thing rally a little bit higher. We'll be looking to use that rally, get back on the short side. We're coming off the median line support, so your obvious and initial targets would be the median line off the highs. All right. Even if we do jump into a new short position off these levels, guys, I really want to stress to you how critical this support region is. Huge pivot going back, since the start of since mid-2014, right? Pivot, breakthrough, resistance, support, right? And we're right in there right now. So really critical support. Once we get through this, Chirata, okay, look for 143.46, which is just simply the low from December. You have a whole host of median lines that converge down there over the next few days. You already got the trigger break from yesterday in momentum, so we'll be looking for that 40 break to the downside to reassert the short positioning sub 46.81. Really clean levels. Wider ATR as well, so you got a nice 40 pip, 39 pip, quarter of the daily ATR, gives us a little bit more room to play with. These are the new levels I'd be working with heading into the US session today. Any questions on Euro Aus? As I noted yesterday, keep in mind today, I keep saying tomorrow, today we have on tap Aussie data later tonight. And here's what the Aussie data print is expected to show. The most important thing here, guys, is to see how the headline figures play out, because we are expecting to see unemployment uptick to 5.9% from 5.8. Okay, but that uptick in unemployment is expected to come alongside broadening in the labor force participation rate. So we're going to dismiss that uptick if we do see labor force participation uptick. Okay, as the labor force gets bigger, tends to put artificial upward pressure on unemployment as the labor pool inherently increases, and we'll be looking to see how that dynamic plays out. Interestingly enough, you did see a little bit of a shift here from yesterday's expectations of what we're looking for. Now we're looking for about 17,000 gain for the month of March in Australian employment. We'll also be looking for the full-time, part-time breakdown. You saw a nice rebound there last month after a big drawdown the previous month. So certainly we'll be paying attention to the metrics as well as that headline unemployment read. Likely to charge some volatility across the Aussie pairs. So Euro Aussie on a weak print, you'd see a little bit more upside play. As far as the Aussie dollar is concerned, Mitten, let's take a look at what that's doing. So here's Aussie dollar on the daily, and then we'll jump into the radar charts from yesterday. Here's what Aussie dollar is looking like on the daily. Today's high was an exact tag of that sliding parallel for the current operative slope that we've been working with off of last year's low. Okay, I don't really want to get aggressive on the Aussie still. I do like the downside, but I just don't want to be fighting this perpetually. We had some nice scalps on the shorts last week. This week, guys, we've been holding within the comp. Look how clean that is. Look how clean that is. It's just ridiculous. So at this point, it looks like we're trying to make a move to the downside, breaking the lower median line parallel. If we adjust this just ever so slightly, you can see that we're basically just there right now. I'd actually be more inclined to throw on a sliding parallel here. Okay, basically highlighting this region. Okay, so the momentum signature has not broken sub 40 yet this week. we do see a 40 break in momentum, specifically a push below 76.30, which is a basic, simple 236 of the advance. Oh, I'm sorry about that. We got to adjust that retracement to the new high. 38.2 retracement, same level, 76.29. That's what we'd be needing to validate a little bit more of an aggressive downside play here, finally, in the Aussie dollar. But just keep in mind, if this formation is in play, right? Simple break of resistance, come back, check it as support, then rebound could be the play. I don't know. All I know is that near term looks like momentum is turning over on the daily chart. A nice reversal is playing out off the highs. Keep in mind this is still ongoing divergence. Go ahead and bring it into a line chart. You'll see a higher high, and a higher high. Series of lower highs. And it looks like we're rejecting 60 as resistance, which would further validate possible downside move in the Aussie. So with the seasonalities playing out and the like, it looks poised here that we might turn lower finally in Aussie. What would make you look for longs then on the Aussie outside of the data print? Yeah, it would be a break of that median line formation off the highs from October, Eileen. This thing. You know what I mean? That would be a very simple breakout type trade. And remember what we always say, Eileen, the topside break of a ascending formation can sometimes be the sharpest, most magnitude part of the rally. Okay, so if we do see a topside break from here, especially, I just want to bring your attention to one other trend line that isn't too far from where we are right now, but I am watching, and that's this trend line here. The lows from July of 2013, January of 2014, caught the high here in January of 2015, caught the high again in May of 2015. That level comes in higher, right around 77, 75 at this point. So really strong pivot lines. And these pivot lines, guys, are just as critical as basic support and resistance, okay? Any 2 points is speculative, 3 points is confirmed. So on a move like this where you have 4 separate inflection points, adds definitely validity to that. So a little bit higher from the breakout, Eileen, takes you into like 70, like I said, 77.70, 77.80. But again, a topside break of the ascending formation is really what would put me back on the long side of the trade. Keep in mind one other thing, guys. This is simply the April opening range. Here's your April open. Your April open high was right here. In fact, the April opening range high was 76.55. Today's high was just above that. The opening range low, 70, basically just at the 75 handle, just below. And you have a clear-cut monthly opening range. Last month, or February, just to give you an example of how these things tend to work out, February, we made an opening range within the first 3 days of trade, in the first 4 days of trade for the month, and we sat in it all the way to the close of February trade. But look what happened in March as soon as we broke those highs for February's opening range. Right to the moon. So we're going to be watching these opening ranges at this point, again, against that upper median line parallel. I don't want to get aggressive. I am certainly looking to play the short side, but I'd need to get below, there's the rebound. I'd need to get below that 76.38 level before I kind of gain confidence on trying to short that. Make sense? Yeah, the nimble and just jump in, or saying break and then the pullback. It's always the break and then the pullback, right, Eileen? Always. Especially on a play like that. You're always going to wait for the break, or wait for the pullback rather, towards that same breakout level, then you buy it. If you are buying the breakout on a release, absolutely what you said, super nimble, super small trade size, and you got to be very quick on that. But no chasing, right? Yeah, we never want to encourage that. Francis, great to see you in the room. Please don't forget Dollar CAD. How can I forget Dollar CAD, my man? We will definitely cover that. Okay, any other questions on the Aussie dollar before I move off? Mitten, does that help? Do you have any other specific questions on the Aussie? Let me know. Would like to see a turn lower here. We need to see 76.38 break before we get excited on that. Okay. So I guess since we're on the dollar crosses, Francis, I'll jump into the dollar CAD first, and then we'll go over the radar charts. Mitten says that's great, especially as looking at possible shorts. Thanks. Yeah, you're more than welcome, Mitten. I think you're on the right track, man. That median line I've been watching for months now has been pretty spot on, man. It's been pretty spot on. And not only that, one thing you want to take note of is how stern the reversal is off of that. So when you look at a median line or a resistance line or support line, whatever, look at how price action reacted. On the day here on the 18th when we tested it, we closed well off the highs. Big reversal day. Again here on the highs that we made on March 31st, big spike, closed well lower on the session. Here today, rallied right into it, couldn't even get through, pushing lower. And on all of these peaks, ongoing divergence. So there is a lot to look at, and your bearish invalidation level is very clear. That's basically today's highs that we made so far in European trade. Jimmy, great to see you in the room, says, how long after the break do you wait? Or do you wait, I think is what you're saying, when buying a pullback? So, Jim, when we see the breakout, it's not about necessarily time, it's what price is doing. So I want to get as close to the breakout origin as possible. So when price breaks out from here, I want to see it come back and test that same support resistance level as support. And that's going to be my ideal entry. Okay? Mitten says, yep, the divergence is getting my attention. Yeah, just remember one thing. Divergence is not a timing aspect. Okay? Divergence is just telling you whether there is momentum behind the move or whether that momentum is waning. One thing I always say about divergence is it can last for a day, a week, a month. Remember that, right? It's what price action is doing that's more important. So yeah, that's the only issue that I have with building divergence. You can see building divergence for the entirety of the month as you continue to press new highs. And then all of a sudden you're sitting there holding shorts because there was divergence 10 days ago. So we have to be, very meticulous with how we're looking at these indicators to not misuse them. At the end of the day, it is telling me that momentum is waning. Now it's up to price action to suggest the same thing. All right? So Jim and Mitten, I hope that answers your questions. If you have any other specifics, please feel free to post them on the message board, as always. Okay, so let's just jump into dollar CAD here for Francis, and then we'll jump over the radar charts from last night. So before I go over dollar CAD, I do want to take a quick moment and talk about crude because the correlation is still there. I do want to note that crude is coming into a region of resistance that we talked about yesterday. You might have seen me tweet this chart on MB Forex. Look, these are not levels that I come up with, guys. These are the market's levels. So I appreciate all the comments. But the 40, what was it that I tweeted? 4180 region or whatever. We ended up crossing above that just by a couple of cents. The high was 42.22. Okay, you're basically looking at the median line formation that we've been in since February of last year. There's the median line. The 618 retracement from the decline off the October highs. We're sitting on that as support basically. And just like we were looking on that pivot, remember on that chart, what was that? Gosh darn it. Was that Aussie dollar just now? Okay, lost my train of thought there, guys, but sorry about that. Basically, I just want to show you this. Same thing that we were looking at with that other daily chart. I can't remember what pair we were just talking about, but support, resistance, this is the third tag. So again, another pivot. This pivot, where the origin of this slope came from, guys, is right here. Support, resistance, breakthrough, instant support. And that caught the low that we made earlier in the month. Okay, that same slope extended off the lows from November. Support, support, break, resistance, resistance. Okay. Now that's not to say that we're not going to move higher per se, but I am under the mindset here that you will see some sort of near-term pullback in crude over the near term. So what that means is dollar CAD to the downside might be a little spent here. At the end of the day, if we do breach the highs, you're looking for a tag first of this median line off of the lows for the year, and then into a 764 basic retracement off the high, and that takes you as high as 45, 45.03. Excuse me. Excuse me. Oh, if we break below, back below 41.17, which is essentially the high day close that we made for last month, you'd be looking for initial targets at the 200-day moving average, and then right back down at the lower median line parallel, i.e., basic 236 retracement. So the levels here are pretty exceptional for crude as well. You're coming in some near-term resistance, the median line off the highs, that pivot line that we talked about, and the risk is for a near-term pullback from here. Excuse me, guys. I'm not sure why I'm losing my voice here. It was on the Euro Oz. You had the pivot line from 2013. Right. Thanks for that, Min. Yeah, sometimes all the charts start to mesh together in my head. Absolutely. That's what we were talking about, this pivot line right here. So, yes, that's the setup that we're looking at on crude coming in some near-term resistance. So what does that mean for dollar CAD, Francis? Here's what dollar CAD looks like. First on the daily. Okay. One thing I wanted to note, obviously, we've been talking about this trade for weeks now. The 29.65, 29.76 break that we saw earlier in the week invalidated the long side bias. We've been looking lower ever since. Scalp targets all have been taken out at this point. I don't have anything new beyond this region. Okay. The last target that we noted was 28.31, which was the actual stretch low for October of last year. The next downside target, you really got to look to the daily chart, and that's, well, I have a soft target here at 26.66. Which was just a clear pivot in price. And a stretch high from back there in 2015. But there's really not much downside targets, and I'm not really interested in playing the short side on a scalp basis for dollar CAD from here. I do think you make a new low, but with crude at resistance and the trade still looking kind of spent to me as far as the downside is concerned. Not really looking to play shorts in dollar CAD any longer. One other thing I wanted to point out: basic trendline resistance break could be a simple comeback test of trendline support and then move off. I don't know. Okay. Again, similar situation here in that you have some ongoing divergence in momentum. Higher low, higher low, lower low, lower low. Okay. So I'm going to go ahead and remove this pitchfork, guys, because we're done and clear with that. So I don't want to stress it anymore. But just keep in mind that, when these things go into free fall like this, it's, fool's errand trying to call the low. That being said, we would need to get some constructive play here to start to look, even to consider possibly taking some long exposure on dollar CAD at this point. And again, 29.65, 29.76 is still key resistance. Okay, that's not going to change. Former key support, now key resistance. One thing I want to point out: the slope off the high here, this is the same slope off the lows. And if you take that same slope and extend it off the 2006 stretch low, nice pivot in price, nice pivot in price, pivot, resistance. Follow me with that purple line. Support, look where it converges right now. Right here. Again. 29.65, 29.76. Key resistance for dollar CAD. Here's what the 30-minute looks like again. Oops. Okay, so you're sort of out of structure here. I just want to take a look at this real quick. Bear with me. Could be a near-term play. I'm not going to stick with it for now, but it highlights that upper median line parallel heading into the close of U.S. trade today, again at 29.65, 29.76. So either way you look at it, guys, that's really, really the critical region so far that you'd want to pay attention to. I would say immediate resistance is somewhere in the range of 28.30. Again, that October low coincides very nicely with the lower median line parallel we broke through last night. And this is what would alleviate the immediate downside pressure. Okay, so move surpassing 28.30, you might want to look to buy pullbacks back towards the median line, but that's it. Okay, we don't want to get too aggressive until we get back above that 29.60, 29.82 level. Any questions on dollar CAD? Francis, does that help? Eileen says, these days, dollar CAD strength with oil making the moves or dollar weakness. So it's a little bit of both, Eileen. I would definitely say that dollar weakness has propagated the decline a little bit more. Crude strength is just, that correlation will strengthen and will weaken and will strengthen. It's actually starting to become a little bit stronger at this point. So it's something I'm definitely paying attention to. Mario says, can you give a quick update on your CAD yen report, please? Absolutely. Rate report at 10 a.m. says Hussein. Which rate report are you talking about there? That's the dollar CAD. It's the BOC interest rate decisions today, right? So it's the rate decision. That's at 10 o'clock. Absolutely. So Francis, you're more than welcome on that. So watch the dollar CAD today. Again, breach through to 28.31 would alleviate the immediate downside bias, but really it's 29.67, 29.80 that you need to get through to get back on the bullish side. CAD yen, let's jump right in. That was highlighted on yesterday's radar charts. Here's what those look like. So we're coming into some resistance. I'm still stalking a short here. I did get a really, really tight break-even stop, or not break-even stop. I really did take a tight stop on this trade yesterday. I took a short just ahead of that 85.24 level with a stop just above it. It spiked right through and took me out. But here's what CAD yen looks like at this point. Here's the daily. Okay, so this was sort of initial resistance that would have wanted to see hold. The swing low that we made back here on March 24th, former lower median line parallel, which acted as support, now resistance. We plowed right through on a closed basis. So right off the bat, you're looking for a little bit of a stretch higher. The problem is this. Here's what CAD yen looks like on the 30-minute. You're kind of muttering higher. You're getting divergence into the highs, and you're still holding that near-term time frame. So while I did get stopped out on that really tight stop and overnight trade, I still am looking lower. And sometimes on these rallies, guys, when you're playing the turn, you just need to be a little bit more patient. And it takes sometimes a couple of attempts before you actually catch the high. So I'm still of the mindset that this thing is going to give us a near-term comeback. I am looking for short exposure. Initial targets would be just simply that median line right now, which is about 40 pips below where we are. You're looking for about 30 pip per scalp, with really break below the lower median line parallel needed to invalidate that side. Here's what it looked like yesterday. Right, so we came right into this region. I thought this trigger right here was breaking. And again, this is partially my fault, and I always tell you guys to do this. Sometimes, I forget to do it myself. But when you're looking at 30-minute charts, this needs to close the candle below that region to get the conviction of the break. Right. In fact, that 30-minute candle closed much higher, and it didn't even look like it was even testing it. Right, it backed off pretty quick. So a little bit fake out on my part there, but long story short, I still think we're on the right track here for CAD yen. It is going to be a counter trend trade. So if we do find a decent short trigger, you're trading half your typical leverage. And again, you want to bring down those stops to break even as soon as you can. Long story short, we need to get back below the lower median line parallel to validate the reversal and the continuation for the broader downtrend. Remember, we turned super bearish on this last month. For those of you who've been with us, this was a textbook resistance failure trade. Textbook. This was the yearly open. You failed right there. You had a median line that we were working with. You had the upper median line parallel, basic trendline resistance off the highs. You name it. You name it. Momentum sub 60 the entire year. And just a beautiful move. So on the recovery here, on the way up, inherently, you're looking at the retracement of the decline. And that's why that 618 right here is sort of a level of interest as it coincided with the upper median line parallel. So I'm still thinking you maybe get some more sideways movement here. A downside break below the median line will put me back, at least near term, on a very nimble short scalp. So that's CAD yen. Mario, does that help? Do you have any specific questions here on CAD yen? Again, watch the BOC interest rate decision. No change is expected for the entire year, and I think I showed you guys this yesterday, but if we take a look at the world interest rate probabilities for Canada heading into the interest rate decision today, there are no expectations, guys, zero, for any type of move from Bank of Canada this entire year. So they're at 0.5% is what they're currently at. The market is expecting for the rate to remain at 0.5% pretty much for the entirety of the year. 80% chance that in December we will still be at 0.5%. Okay, so the only threat here for the BOC interest rate decision is if the commentary is exceptionally dovish or hawkish, which I don't think we'll necessarily get. But it's really the devil's in the details in the commentary, not so much in the decision. All right. Hey, Mary, you're more than welcome, man. Great to see you in the room. All right, next up on tap from yesterday's radar charts was the Aussie Swiss, another trade. I think very interesting from where we are at this point. Here's what the Aussie Swiss looked like yesterday. Very similar situation. I'm looking for that rally to teeter out to give me some possible short exposure. We were looking more so towards that 73.58 zone, 73.55 zone, the 50% retracement of the decline. Here's what Aussie Swiss looks like. Remember, we were covering this a few months ago. We had some really nice, or a few weeks ago, we had some really nice scalps on it. Haven't really touched it since, but I think it's coming back into view. Here's what Aussie Swiss looks like on the daily. Okay, so that resistance zone we were looking for, we plowed right through. Here's the 30-minute chart real quick. We plowed right through, and the next area of interest is the former lower median line parallel that we broke through. So if we take a zoom out here, this thing, right? This is when we were trading on the rally here earlier in the I guess earlier in the year. It was late February, early March was the last time we traded Aussie Swiss. You can see the downside break. It could be just a simple former tag of support as resistance before we move off. I don't know. The only thing that adds sort of conviction in my mind is the fact that at 74.02, the 618 of that same range converges on that lower median line parallel. So I think you might see one more stretch higher here before you turn lower. That being said, broadly looking for a rally to sell still. No changes here on Aussie Swiss. Just means that we might have a little bit more to go before things shift up. And let me just take a peek at something real quick, guys. Bear with me one moment. Yeah, okay. Interesting. Okay, I didn't even notice that. Looks like we got our momentum trigger break to the upside, off of support rather. Yeah, that 618 is still a pretty big pivot. Watch 74. Watch 74, 74.05. As you head into that figure, if you get some ongoing divergence, which you're already making, by the way, right, on this last stretch to the upside, barely, but you're making a higher high in price. The oscillator made a dramatically lower high in price. So I think you're still getting that momentum waning signature, but you look for a stretch, one final stretch higher before you get the conviction for a near-term pullback. Also, on its face, this could be a simple 1, 2, extended 3, your sharpest and longest part of the rally. 4, sort of a truncated or a long 5 before you turn over a little bit more firmer for correction. So look higher for short triggers on the way up. Near term resistance at that 618 retracement, just above the 74 handle. By the way, 74.39, that's the high day reversal close for the year. In fact, if you go to this report, guys, the Aussie Swiss report that we published, this was back from March 10th. You can see this was actually the high day reversal close. This is when we turned our bias to the bearish side of the trade, looking for a break below 72.83. So obviously it took a couple of weeks, kind of fell out of focus for us while we held this range. We did see that downside break come right into the 50% retracement, 71.52, before the rebound higher. So again, looking for an opportunity to get back on the short side on a rally higher. Any questions on Aussie Swiss? All right, sterling yen is another one that we were on for last night from the radar charts. Here's what that looks like. I still like the long side, but we're at resistance right now. So yesterday we highlighted this formation that we drew up during the webinar yesterday off the lows. We were looking for a stretch into 155.80, specifically 156.12, a little bit bigger of a resistance region. You're looking at the 618 extension off the low. You're looking at the median line for the current operative formation off the highs, and they were all right here in this region between 55.80 and 56.12. Here's what sterling yen looks like first on the daily. Okay. Just wanted to highlight one thing, sliding parallel for the same operative slope. This is all still the same slope we're working off of from just those November highs. You can see that slope parallel off the September low, literally caught the low that we made in February. Near term, sterling yen looks like this. Okay, so we're just scratching the bottom of that range at 55.80 in overnight trade. I think the high was like just ahead of that. 55.74. So 6 pips off, and now here we are again testing basic lower median line parallel support. I'm looking for a stretch higher into US trade right into this region for a possible move lower. I'm bullish long term, guys. This would be a counter trend, just a correction trade. Ultimately, that pullback would offer some nice opportunities to get back long. I'm looking back towards that 50 line, to be honest with you. So this this bisector right here, on a break to the downside, I'd be looking towards that region, towards 55.20 for possible entry back on the longs. And again, once we get that break, guys, if we do, your basic and sort of go-to retracement is just going to be the near-term range off the lows. So something like this. Okay? And look where that 38.2 comes in. Same region. We can't do this now because, again, we don't have any conviction of this being a high. But once we break that parallel, I'll be working with this retracement. Also, divergence into the highs as price action makes a higher high and the oscillator makes a lower high. All right, so lots of pairs that are sort of pending as we head into the U.S. Open today. I think we'll get some decent plays. Pound yen, less throwbacks than pound dollar. Ooh, I don't know if I want to say that, Eileen. Pound yen is actually notorious for being a very volatile pair. You're picking one of the strongest currencies versus one of the weakest. So right off the bat, your discrepancy or the volatility that you'll see on the cross is rather sharp. So I wouldn't say that it's. I would say it's right along the same lines. Absolutely. I mean, this thing sees some serious moves, right? 195 is the daily ATR. Okay, pound gives you about what, 114? Yeah, 144. A little bit less. Graham says pound yen is called the dragon for a good reason. Yes, it is, my friend. I haven't heard that in a while, actually, Graham. We used to call that the dragon on the desk all the time. That's so funny. Yeah. Know your pairs, guys, based on their volatility and what you can expect. Again, these are pairs that are a little bit more meaty. I like to use them when there's a lot more clarity in the price action because you will get those larger trade ATRs, which is great. But also on the wrong side of the pair, it can hurt a lot more. So you just want to be a little bit more meticulous with your entries on these crosses, specifically with the yen crosses right now. Although we're kind of highlighting a lot of them, it's a risky business with the BOJ sort of monitoring every tick that happens in the markets lately. So we went over oil. I do want to just touch base real quick. We're a little bit towards the end of the session here on some of the commodity pairs. Really quick, guys, here's what gold looks like. Everyone's going to be looking at this trade over the next few days, and I think we need to focus on it, or at least be mindful of it. The daily chart's looking a little bit more messy to me. I'm kind of looking for support right along the former upper median line parallel. I think the bigger tell here is going to be the weekly chart. Or I want to show you the 2 hour, but here's the weekly chart, right? Again, constructive above 1193, no change on that front. Here's the 2 hour chart. And we highlighted this same exact setup. I think it was Sunday. Yeah, here it is. So this is the same median line formation, guys, holding pretty nicely, okay? We did get the tag of the 618. We didn't get quite into the 764. We turned just ahead of it before recovering. But again, our bullish invalidation level for the immediate upside is still 1236, basically the lower median line parallel. All right, so as far as near-term price action in gold, still looks pretty decent. We typically don't get too intraday in the gold trade, as it were, but I think it's starting to look a little bit cleaner here. Last but not least, I do want to just take a quick look at some of the, and this is for you too, my man, some of the equity indices. So here's what the SPX looks like. Yesterday was a pretty important day. It was an outside reversal day off support. And again, bring it into a close on the line chart, perfect bounce. Perfect bounce, right? So near-term resistance confluence still is 2081. That is, just for your reference, the median line off the lows here. An 88.6 retracement from the decline off of the November highs. And I don't necessarily want to stress this, but the high from November, not connected to the December high, but connected to the April high that we made earlier, has us basically at resistance right now. I don't want to stress that too much, but it is there. Same thing with the Dow. Here's what the Dow looks like. Even cleaner. That purple line that you see here on both the Dow and the S&P are the yearly open. So here's your 2016 open. You're still above it. In the Dow, 2016 open acted as support, specifically with the confluence of the lower median line parallel there. The highs here are the first level that you want to look at. So let me just highlight that. But a break to the top side, you're looking at 17,976, 18,003, longer dated 88.6 from the highs that we made in May of 2015, and basically the high that we made in November of last year. Support trigger pending. No support trigger here, at least, not yet. All right, so risk is coming in some interesting resistance. Keep that in mind as we get deeper into the U.S. trade here today. And finally, on the dollar index, we did talk briefly about the 30-minute chart here for the dollar, looking for resistance near 11,891. 11,905 is the near-term bearish invalidation level. Okay, a break above that would basically be a break of the weekly opening range. It'd be a break of the upper median line parallel, basic resistance off the highs, and that would validate a little bit more of a stern, more significant topside recovery here in the greenback. That being said, look for that resistance. I'm still under the influence or under the impression that we could get that low that we're looking for in the dollar. So here, I'll do a drill with you guys real quick. If you take a longer term stance, and this is something obviously, Jamie, I'm sure we'll do with you later today, but if you take a longer stance on this, and from the low in 2011, remember post-crisis, if we take a pitchfork off that low, 2013 high, to the 2014 low, okay, I know it's a little bit of a messy slope here, right? Now that we've kind of meandered out, then we've broken the median line. But what I wanted to show you is that operative slope, if we just take this line, okay? Don't mind the median line formations at this point, guys, but I'm just going to put this right here. Look what you find. Support, support, pivot, resistance, pivot, support. Keep going up. Look where it coincides. Right along the lower median line parallel here today, and over the next couple of days it'll be a little bit higher, coinciding with the 50 line. So my point being, that's sort of a level I would think to see a little bit more of a concrete low and a reversal type of play, which is what's making me think we still have a little bit lower to go in the dollar index. I know that we've been marking divergence on this low. I understand that the possibility for a near-term rally is definitely there. But I wouldn't be looking for a reversal play until we either clear that upper median line parallel or we get a reversal off that longer standing median line we just covered. Okay, so there's a couple of different things that suggest we might have some more downside to go in the dollar before we turn around. Obviously, heading into tomorrow's CPI print, that could be the trigger or the catalyst to offer that last final dip, or it could be the catalyst for the breakout. It really depends on how far the inflation picture moves from the expectation. Okay, we'll cover that live here tomorrow morning in the webinar, guys. No problems. All right, so if there are no other questions, we'll go ahead and wrap things up here. Remember, at 1 p.m. Eastern, my man, Mr. Jamie Setley, will be on with the midweek strategy webinar to go over some of the trades that we've been covering over on the swing side of things. So don't forget that today at 1 p.m. Eastern. Also, the Beige Book, guys, released at 2 p.m. Eastern. For the updated assessment from the Fed's 12 districts and the BOC, which is on tap in just over half an hour. Best of luck trading to everyone here in the room, and I will see you all tomorrow morning, bright and early, 8:30 Eastern, for another intraday strategy webinar. Have a good one, guys. Cheers.